right. So I can get this opened up here. What's good, Dustin? You can hear me? Make sure we're live and rocking on the YouTube side. All right, all right. Mark, what's good? What's good? We get kicked off here in like next 2 minutes. Just making sure everybody has the info they need to get in. How was your weekend? You guys had a pretty good weekend. All right. For those that don't know, we're live every Sunday, 7 p.m. Live every Sunday. Same place, same time. Okay. Make sure I can see it here. All right. All right, gang, let's go ahead and get this thing, kick it off. And everybody will join, catch up here. All right, all right. So, welcome to GamePlan Sunday. Today is May 3rd, 2020. We had a pretty interesting week last week, so we're going to talk about that. We'll also take a look at what we noticed coming down the pipeline this week in the near future, and then see if we can find some plays on top of that. So, interesting week last week. We had lots of weak economic data, basically. So a lot of terrible economic data, which I think Wall Street pretty much already expected that. However, the market still rallied, which that was interesting in itself, because you say how we have all this dire economic data, yet the stock market is moving up. So we see that the stock market is not moving in, it's out of touch with reality. It's not moving lockstep with the economy itself. Um, what we are having, what we're witnessing is basically the stock market is rallying up because of the Fed's interference, the Fed's pumping in the money in the markets. And so Fed's policy is not stimulating the economy, which we can clearly see that. That's the economics, that's the monetary policy, fiscal policy. We're not seeing that moving the economy. It's not. So when their policy no longer moves the economy, however, it moves financial assets, that's furthering the wealth gap, right? That's furthering a lot of the gaps that we have: wealth gaps, income inequality gaps, opportunity. All of that stuff is just, it's just bad. So on one hand, you have the stock market going up. On the other hand, you have over 30 million people that's laid off. Over 30 million people that's out of work. We had over 3.8 million from the last week that were out of work that filed for unemployment. And the thing is that you got to understand these numbers are not totally accurate. Okay, this is just a good basis. You got to think about all the people that they're not counting in this data. So just the people that they know about, you know, and so that's just terrible. Along with the other economic data that we saw, we had the PMI numbers that came out that were terrible. Like I think the worst on record ever. And the thing is that they're already lowering the bar. And so, from the previous weeks, we saw, I was saying that, it's a dangerous time when bad news is good news, right? So, because, we see the markets get, quite irrational, especially when they lower the bar, right? But normally, under normal circumstances, you would see the markets would just move like big time if these numbers are coming in like this. And so, you're not getting that big drop down yet. And it's all terrible. It's all terrible. But the thing is that the worst hasn't come. The worst is still yet to come. And so that's the thing. So we're seeing terrible news, terrible everything, but we see the markets melt up, and that's because of the Fed's interference. So, you got to be careful. This is a very, very treacherous market right now. In fact, we just finished up April. We're in May right now, and there's this common saying in Wall Street that you sell in May and you go away, right? And so you can see that the markets had this nice drop down, which is huge drop down. A lot of people lost a lot of wealth in that, and then they got this melt up. As we look at the S&P 500, we see that it pops back up right before May. Okay, so now that May is here, the common saying on Wall Street is sell in May and go away. So they done got their profits or whatever. Just go away, come back next year, right? I mean that's just pretty much the way they do it. So that's a big theme, for the big investors. That theme is interesting, and we can kind of see it look like it's starting to play out here on the charts, on that side. So again, we have some terrible numbers for the week. The Fed stimulus, the Feds decided we're not going to change interest rates. We know we had the meeting from FOMC. They left interest rates the same, which we already expected that. I think what people was anticipating to see if the Fed would go negative, and we don't want to see negative. Negative is just terrible. We haven't seen any time that's actually helpful ever in any kind of economy ever. So we don't want to go negative. So they're just trying to keep it low. Also, we had earnings from all the big players in the game that came through. Amazon and Apple was the highly anticipated ones where they didn't perform as well as they should have. So we saw that didn't come through, didn't pan out well. However, we already know Apple and Amazon, they're going to be the companies that's going to be able to survive this whole thing. And so what's interesting is that you got to understand that you want to be a value buyer of these things, meaning you want to buy these stocks at a good price. And when they are overpriced, even though the data is good and even though they're still going to be here, do you want to be the person to buy it that high? Nobody wants to buy it that high. So right now you see people trying to get rid of those shares or what have you, sell it to a greater fool. It's the greater fool theory, right? Somebody else who want to get it, get up out of there. You wait for the next drop and buy it at a another dip basically. So that's what we're seeing. Overall, because of all the mixture of the data, the divergences that we have in here, it just leads me to again anticipating. My anticipation, my direction in the market is that it's going to be very choppy. And so when things get choppy, it's normally a day trader's market. Normally some of the swings, they wouldn't pan out as the setups wouldn't hold through as long as they normally would in a choppy environment. The only good news basically is the Feds, coming in and intervening in the situation. So Wall Street is, looking good on that. But on the economic side, it is terrible. It's a nightmare. So, that's what we're looking at for that. As far as this week coming up, let's see, we do have some earnings. Monday, we got Tyson Foods that's going to be reporting. And that's an interesting situation too. So you have like these meat companies, they're shutting down their operations, or they have been shutting down because of all the COVID cases they've been getting. And so quite naturally, one has to deduce that there's going to be a shortage in meat, right? There's going to be a food shortage, meat shortage, what have you. That it hasn't hit yet, but it's going to be happening. And we're already seeing inflation in the prices of those things because of the shortage. And so you're seeing inflation pressures that's coming into the market. For one, you got the Feds, printing money and trying to provide stimulus. That's inflationary. So you got inflation that's coming in the game, and then you also have food. So you have this meat situation coming up. Your prices are going up, so that's inflation also. So these factors is coming in. So all this inflation is popping in. Normally, gold is the hedge for inflation. So that's why you guys have been seeing the gold, gold has been rallying. We can cover that here in a second. But just understand Monday is going to be pretty light, but Tyson Food, they're going to be reporting earnings. And again, I think expectation across the board is pretty much down. Now, another thing is that last week, a lot of companies, they hit their guidance, right? So it's hard when you're trying to build models. We normally get insight from the senior management, CEOs or what have you, CFOs, about their expectation of their company in the future. And we take those assumptions and we put them in these models that we make, and it helps us to drive, future evaluations of the company, based off of, them, because, they know their company better than anybody else. So we try to get it from them in the financial statements, but they're actually not providing that. A lot of the companies, most of the companies that's reporting earnings, they're not even providing that. So that's another glimpse that things are not good, not at all. So just don't confuse the stock market with the economy. I'm just saying, yeah, you can make money and that is great, but understand that the two are totally different. And that's the reason why you have most stock traders, even myself, when I first came into the game, I was very narrow minded. And most stock traders are just very narrow minded. And it's good when things are good, but when things are bad, they don't understand why. It's a bigger picture. And so you have to get into the economics on that. It's not a requirement for you to learn that stuff to make money, but it's very, very helpful for you to understand all these things. We'll talk about a little bit of that here later. But let's get back to the earnings. We have Tuesday coming up. We got Activision Blizzard. We got Walt Disney. We got DuPont. We have Electronic Arts. We have Insight, Marathon Petroleum, Martin Marietta Materials, Newmont, and Regeneron Pharmaceuticals. So those are pretty much the ones on Tuesday. So I think Tuesday is going to be like the highlight of the week because of Activision Blizzard, which for you guys who don't know who Activision Blizzard is, it's a video game company. They make Call of Duty. If you have kids, then I'm pretty sure you probably bought them this game, Call of Duty. Well, this is the company that makes that game. And since kids have been out of school, they've been home probably playing Call of Duty, which is a new game that just released not too long ago. So I think expectations are that Activision is going to, beat their earnings, which quite naturally just seems to be the thing that makes sense. So I'm bullish on Activision. We also have Walt Disney, and then we have Electronic Arts. So Electronic Arts is another video game company. They make a lot of sports games like Madden and things like that. They also make my favorite game, which is Battlefield, but Battlefield is, it's pretty much history right now. They're working on the next game, which will come out next year. But I think EA is probably going to be seeing, a nice earnings as well because of sports, the absence of sports right now. Some of my guys that I play the game with when I do have time to play the game, some of them, since Battlefield's been going on a decline, they've been jumping over in sports because they miss sports. So because there's no sports on TV right now, so a lot of them they're playing the NBA 2K, NBA Live, or what have you, and then Madden is a big one. So the football guys they're playing that game. So I think that EA they may see a nice boost from the video gaming sector here. So that's Tuesday, and then Wednesday we have General Motors, we got PayPal, we have T-Mobile and CVS. So that's going to be all right. I think PayPal and T-Mobile will be the biggest ones we're paying attention to. CVS also. Let's see. Thursday we have Bristol Myers, Squibb, Danaher, Hess, Hilton Worldwide, and Raytheon and Viacom. So we kind of already know what the story is going to be with Hilton. Hess, you already know what that's going to be as well. It's going to be a nightmare for them. And then let's see, Friday, it's pretty light. We got what EOG, we got some energy companies, Broadridge Financial. I think Friday is going to be pretty light. So those are like the earnings that, going to be expecting. So, make sure you pay attention to Walt Disney with them being shut down. I think that's going to be really negative for them. You got EA, you got Activision. I think those is going to be a bang. That's going to be, the thing to help the market probably bounce back, if you will. If there's any kind of bounce, it'll probably come from those earnings on, was that Tuesday? And then you have General Motors, which I think the expectation is that it's going to be terrible for them to have cars that's just sitting, rotting away on lots. I mean, cars have been sitting on lots before coronavirus, and now, I mean, it's even worse now. So again, it's just a nightmare situation. On the economic front, we do have some more data that's coming out. So we got the non-manufacturing PMI numbers that's coming out on Tuesday. We also have the ADP employment report for April. The economists are forecasting a loss of 20 million non-farm private sector jobs. And they're saying that this is the steepest monthly drop ever recorded. So, I mean, we're getting the worst economic data ever recorded. But the market has, been crazy high for some odd reason. And then on Thursday, we do have, let's see, the BLS, the Bureau of Labor Statistics, you guys. They are reporting productivity and unit labor costs. Let's see, Department of Labor, they're talking about the job loss. So again, we get the job numbers every week. So we're going to get those numbers on Thursday. And as you guys already know, we have over 30 million people that's already filed for unemployment, and the numbers will continue to rise. So let's see. I mean, these numbers are the highest numbers ever since like the Great Depression in 1929, if you guys don't know. So it's really, really bad. We're also taking a look at the Federal Reserve. They're dropping the consumer credit data for March, and they're saying that they see consumer credit rising by $21 billion to $4.25 trillion of consumer credit, which is debt. That's just not good. Okay, that's trillions of dollars of debt. That's just crazy. And then Friday we got the BLS report job numbers for April, and they're saying that the unemployment rate is expected to skyrocket from 4.4% up to 16%. So, I mean, really, there's no nice way for me to really put it. The economic data, it is what it is. It's terrible. You know what I'm saying? So, the social indicators are also, falling apart as well. So, understand with economics is a social science, really. It's really about the behavior of people. Nobody knows how this recovery is going to come, if there's going to be a recovery or the depression, because what it all depends on is how you and I react towards these things. So that's why we have all these different policies, and everything is, created in this matrix to stimulate you to do something. The question is, will the people get stimulated? So the only positive thing that, or possibly positive things for the markets coming up for the summertime is if, the rollout with, with states starting to open up right now, these states starting to open up, will the virus, situation, continue to rise and get out of control, or does it, will they be able to contain it more? Because you open it up, then you're at more at risk, more health risk. So it's a two-edged game. You're trying to open up to make money, but then people start dying. That's not good, and it's definitely not good for Trump on a political reason, because it's really going to be a test to his leadership. Because whoever the leader is, you got to bear the brunt, the brunt of this thing. And if it's successful, then you get the accolades, right? So that is, interesting. That's the whole thing is, will people come outside right now? Will people come outside, and will people spend money right now? That's the question. So far, I don't really know. I do see cases of people that's just so tired of being pent up in the house that they're doing irrational things, having parties and craziness. I've seen a gang of people at the mall buying some sneakers, some new Jordans that were released, no mask on, no nothing. So it's, that's the thing is, we have all these economists that's trying to figure it out, but nobody knows, because we don't know how the people are going to behave. It's all about how does the people behave. So with all that being said, what I did is on Saturday, you guys know Warren Buffett, he's the Oracle of Omaha. They call him the Oracle, right? And so he's the biggest dog of them all. So he had his earnings situation on Saturday. He does the shareholders meeting, and I'll pull this up here, because in our community we have this here, and I try to provide you guys with as much stuff as I can while I'm free. This is one of those situations that was I was out jogging with the family, so we on a family walk, and it came on. I was expecting for it to be about an hour. It was the longest meeting ever. It was like 3 hours long. You guys know Warren and Charlie Munger; those guys are real old. They're in like their 90s, so they take their time when they talk and things. They're kind of boring. But this time was interesting because Charlie, he wasn't there, and Charlie, I mean, if you ever watch these meetings, Charlie, that's Warren Buffett's partner. This guy, he's normally look like he's croaking, he's like, like he about to sleep sometime, right? Like, yo, somebody check on Charlie, see if he's awake. So this time he decided to stay home. So I think he's probably, trying to rest up. So what I did is, while I was actually jogging right here, so I got my phone right. So I'm actually walking with the family and everything. So then I got my headphones on. So I'm just listening to the meeting, and then I'm taking, screenshots of it. Because while I was, taking my walk, I said, hey, I'll take some screenshots of this and I'll share it with you guys, just in case you guys missed it. And tell you guys what I learned from it, if there's anything to learn. So this is on our website right here. Wall Street Jack Boys, you guys are already not there. Make sure you get on there. But you guys see, I just post all kind of things in here. And I posted my thoughts right here when I told you when I was finishing everything. I said, hey, I'm gonna, download it for you guys, and that's what I did here. So there's a link right here so that you can actually check out the slides. It was, 3 hours long, but it was, you don't need to waste 3 hours of your life watching that. That's why I got this whole slideshow thing here. Let me see if I can just open it up for you guys for a second. And then what I'll do is I'll share it with you. So anybody wants to actually, download it or check it out, then you guys can check it out. It was interesting. It was real interesting, this is the Oracle here. They call him the Oracle, right? He's the biggest dog of them all. And I think that his position in this whole situation is going to be very symbolic. Okay. We're in what I call the Greater Depression. And every time they had these downturns, he's always, a major component. He is symbolic. That's Warren Buffett. So when he moved, everybody moved. And the thing is that he has not been moving. He has not been moving. If I can get my cursor here, there we go. I got all kind of things going on. So let's see. Don't even need to edit this thing here. There you go. All right. So this right here, you guys can download that. All right. And there you go. Drop it on both sides. That's the link for it. You can download it, but you don't need to waste 3 hours of your life trying to figure out what, the OG Warren Buffett had to say. It was interesting because his tone was pretty, it was like a passive aggressive tone. He had like this whole campaign message, like it was like a campaign style message where he was saying, never bet against America, and he said it like that, basically, like, yo, I don't give it what, you know what I'm saying? Whatever goes on, he's like, I don't know what's going to happen in the future, the next week or the next month or the next year. But I do know long term that you don't want to be the guy to bet against America. Now, I don't know, was that a subliminal message to China or what have you? That I don't know, but it was very interesting on how he positioned it. And, they're going to need him to bring the confidence in the market. Trump and everybody, they always need Warren Buffett. He always come in and he's that symbol of confidence to get people popping. So the interesting thing he was saying, and this, and again, I probably missed maybe one slide before this. I can't remember, but this is, what he's talking about. There's nothing fancy about it. But what was interesting that he was saying is that he had to, try to keep people positive, right? So he starts off, to give a nice little story, keep things on a positive tone. And then, he goes into his thing. So one of the things that he was saying is that when he was born, he was born at the time of the Great Depression, right? In the 1920s. And he said that, his father was a stock trader, and that when he was basically, when the depression hit, his dad lost his job basically. And he was saying that luckily his grandfather had a business, a grocery or what have you, where they can get food from, because he didn't know how he was going to get food, to feed the family and everything. So, Buffett is just telling his story, how because of, family, they took care of him in the time of need. Where they were able to get all the food they needed from their grandfather. He said, just run up the tab, it's family, right? And so luckily for that, they were able to survive that situation. But he was saying that the 1929 Great Depression was such a psychological situation. And he was saying that it reminds him of what we're actually getting ready to go through now, basically. He was saying that with that depression, is that it was such a stigma that it plagued Americans for decades before people got their confidence back up to get back into the game. He was basically saying, like, from this situation with COVID and everything, is that, this could be a very similar situation. It just reminds him of that situation where the fear is the thing that lasts the longest, and it takes it over time. And it's like saying like it take 20 years or what have you. Anyway, he was just really describing that. And I thought it was pretty interesting because it, again, with the whole economics and stuff, it's all psychology, trying to figure out how people are going to behave, I don't think people felt enough pain just yet because all the pain hasn't came yet. So that's coming. So just keep that in mind. So anyway, he was saying how the population was, and he was talking about slavery. The interesting thing, when he was talking about slavery, I honestly thought Warren Buffett was about to start talking about reparations. I mean, the way he framed it up, he had like positioned it in a certain way, and he's like, we're going to come back on that. But he was basically saying that, basically what he was saying is that, let me see if he got it in here. He says 6 million people were slaves. About half of 1% of the population of the planet lived in our 13 states. he was basically saying that when we started the nation, it's supposed to be free men and all this other stuff, but we had slaves at the same time. And he was like that, that shouldn't have sat right with anybody, and how we still haven't made that wrong right yet. I mean, this is Warren Buffett saying that. It ain't me saying it. It's not, this is Warren Buffett that, says that. And he was basically just saying that, America's a young country. He was just adding his age and Charlie Munger age up and saying how, they add their ages up. They're about the same age as America's a young country. But I thought he was going to get on the reparations stuff, but he didn't. He just basically went into, how um, that's been progress that's been made, from the time of having slavery to now. He's basically saying like if he was a minority, then basically he would rather be born in 2020 versus back then, which is the logical, thing to, to be, and I'm a minority, right? So I would definitely wouldn't want to be born at the time of my ancestors. This is the time to be born. So that makes sense, right? Because we've made a lot of progress. He was talking about, African Americans and women in particular there. So how we're able to participate in this market. He was basically saying that it's not perfect and he understands, but the progress in such little time. I think he said America's about 230 something years old. It's such a young country. And so we have made a lot of progress. But along that progress, it wasn't a straight uphill. It was, ups and downs. And this is one of those times in 2020 that we're going through one of those down times. But he was saying, make no mistake, don't never bet against America because we want to come through. That's what he was saying. So I'll just show you guys a couple of these slides here real quick, get through them quickly. He was talking about all the wealth that was built in here and everything. Let's see. Well over 100 trillion, at least 100,000 per each original $1. Let's see. Gettysburg, he was talking about that, testing whether the nation or any nation to so conceived and so dedicated can long endure. 16 million males in 1861, perhaps 10 million between. Okay, he was talking about the Civil War, how many people died in that war. Again, talking about the wartime stuff. He was saying that was equivalent to about 4 million males between ages 18 and 60 that were killed in that war. So he's basically trying to, draw this contrast of, American is a resilient country, how we overcome, these big challenges. And I think that he was trying to frame it up to now to try to get people, mentality strong that, hey, don't ever give up on America. We're going to come through. That's basically what it was. It was a confidence thing there, right? I'm trying to see if there was any other interesting slides here, but you guys got the link so you can download and check it out on your own time. And I did this while I was jogging, so I took the screenshots and I got this Microsoft PowerPoint on my phone. And there you go, right there. He was talking about never bet against America. You see that? That was like his thing. He was saying that, and that worked. So he said, we are now a better country as well as an incredibly more wealthy country than we were in 1789. So that's why he was going back in time. He's showing now that, hey, we're not perfect, but we're much better off. And then he went back to the slavery situation here. He's saying we hold these truths to be self-evident that all men are created equal. In 1776, he said, but the first census counts more than 15% of the population held as slaves. So how can you say all men are equal when you got 15% of the population that are slaves? This is Warren Buffett. This is what he said. So he was definitely talking about that. So he's just basically telling, hey, man, we're making progress. But he also talking about the amount of wealth that we actually have in this country. And he was saying that we have so much wealth, since like the Depression and we came up to this point, we built so much wealth. He said that it just doesn't make any sense to have people falling behind. We have so much wealth that we can actually take care of everybody. He was kind of talking about how his granddaddy took care of him and his family, when his dad lost his job, in the Great Depression and stuff like that. And he was basically saying, we got all this wealth and we can do it. So he said we still have a long way to go in creating an even wealthier and more equitable society, but never bet against America. Again, passive aggressive tone, if you ask me, sound like it was a message over to China. I'm not too sure, but it was very interesting because that was his campaign message and he's not even running. And this guy doesn't really care who's president, right? Because he knows his position in this whole thing, this whole war. Like, we have war. Then he got off into this video stuff from somebody who posted some videos that didn't have enough views, 800 some views. It was trying to get people to watch this guy's video about, health pandemic stuff or whatever. He was saying how people should be concerned with that. Then he got into, a little bit of the earnings. By the time I finished my jog, then they started to get into the earnings. And, we basically learned that I think he lost like over $54 billion or something like that. They lost a lot of money, basically. And so that was it, So you don't need to waste 3 hours of your time. Just download this slide if you want to check out the meeting or whatever, and you can check it out for yourself. So I'm gonna go ahead and close this. But yeah, and this is on our website too, so you guys can check it out when I post it on my timeline. Um, so yeah, so that was pretty much what it was. And then he got into some diversity things. They had their meetings and stuff like that. Their votes, for shareholders, and it was basically saying that I think they did some kind of voting about having some minorities on their staff, like African Americans and women. They want to have a more diversified company. That was pretty much it. I'm trying to think of anything else. He just basically said that he doesn't know what the stock market is going to do. He doesn't know what it's going to do long term. He did get into if you got the Q&A sessions were good. It was lighting his ass up in the Q&A sessions, but he was honest though. He came through and he was saying, they asked him about his positions with the airline companies, and he sold all his positions. I mean, the whole thing. He just got rid of all the major airline stocks. He sold them. And you guys remember a couple of Game Plan Sundays before, I had people in there was talking about, oh, I'm buying Boeing, I'm buying this, that, and the third, buying these airline companies. And I was just like, well, just because you have a cheap price doesn't mean that you're getting the best value. Okay. There's a difference between price and value. You have to understand, because that's what I do. I run these financial models and valuations, and they're, based off of the future, what we can see in the future by discount cash flow models and free cash flow and things like that, where we, discount these things to a value in the future, and we can see, this value. So anyway, let's understand that Warren Buffett, this guy's like the king of that, right? And this guy says that right now he doesn't see anything worth buying. And mind you, he's sitting on, I think, $137 billion of cash that, he can buy companies right out. He don't even have to buy stock. He can just buy the whole companies right on out. He could buy a couple of them. Like, that's how much money that, Berkshire Hathaway has on standby, but he's not moving right now. I tell you this, when he starts moving, that will be the market's, leg up. That'll be a strong move up, and it'll probably take for the next correction, before Buffett actually jumps in. So the next correction, which I believe will be terrible, and catch a lot of people with their pants down, but then they will use him to come in and try to uplift those things. So he got enough cash. So, oh, thank you, Shad. Thank you, my man. It's on the YouTube side, so I can see you guys. So basically, just understand, when people see stocks go down, and everybody and their mother was on Instagram and YouTube saying, buy this stock, buy this stock, buy the dip. And I was saying, no. See, you guys don't understand. We go through the data here. I'll show you the charts. Recessions and depressions, they don't last for 2 months. Okay. We know it normally takes about 2 to 3 years on average, which I showed you guys every other Game Plan Sunday. You can see the charts. The charts don't lie, man. The charts say 2 to 3 years before you can get out of that. And this is the likes of something we've never seen before, never been through before. So I call it the Greater Depression. Hope nobody start biting my style, but that's what I call it, because I view it as going to be worse than the Great Depression. And so it's so much uncertainty right now. Nobody has a clue of what's going to happen. We're all living in it together. There's going to be, it's going to be bad. It's going to be really bad. I have a daughter of mine who's getting ready to go to college. And so you got to think about those young kids that's coming out right now. They've been sheltered their whole life, and they have no idea what they're actually getting ready to go into. And some of us were older. We lived through the Great Recession, but you remember people went and got their college degrees and came out and they could not find a job. Now, what do you think it's going to be like for these kids is graduating this year and trying to come into the job market? It is going to be a nightmare. So, that's, all interesting things there. And, yeah, so I just want to touch on that because, again, that was, Warren Buffett. Everybody's looking at, the Oracle of Omaha and seeing what he has. And the guy says that he doesn't see anything worth buying. So again, stop listening to everybody out there saying that buy this stock because it's a cheap price. I'm actually working on a model right now for what I will pull it up, but I got a headache thinking about it. When you're building these models, man, there's so much research and data that has to go into it. And it's so hard just to get the data. You have to create some of the data. You have to use very advanced skills to get absent data, because some data is not present in the financials. And so you have to get it in some kind of way to form your models. Anyway, it's just a nightmare, but it's a lot of work that goes into valuing these companies. It's not just, oh, I see a stock price, it goes down and that's it. See, that's a lot of people so narrow minded on this. For stock trading, yeah, you could just use the charts for stock trading, but you talk about investing, that takes homework, that takes research, it takes time. And so again, you can't just be following people. You have to do your own research. Okay. So, it takes time. I've been working on this model for like a whole week. Okay. And I'm still not finished. So that just tell you how much work goes into this thing. But yeah, like you said, what you would buy something that's falling. That's right. That's what I said. Why would you buy something that's falling? That's because they see it as they think that it's buying a dip, but you let it dip. You let it come back up, and then you make an assessment to see if it's at the right time for you to get in. So, but as we see traditionally, this time of the year, the financial activity normally falls off, every time this year. And this is without a pandemic. We got a pandemic right now. So I think that the expectation is that it's going to get, even worse, in this time around. So again, I think we're going to see things roll over. So with all of that, let's actually go back to the charts real quick because I know I've taken up a lot of your time. So this is the ES right now, S&P 500. Okay. And we'll do the playback. This will be ready tomorrow. We'll do the playback. So if you're on the YouTube side, you can't see the whole chart. On our side, we got the whole chart. So it'll be on the playback on the edited version where you can get the whole chart. But this is the S&P 500. You guys see we had that. Let's change this color here to yellow. All right. We were rolling with the punches. Okay. Bingo. Boom. Came up. Boom. Tagged this floor. All right. Then we got the bounce back. We had a buy position trigger that says get in. You get in. Boom. You come up. It never cleared the 200 moving average. It did get rejected at my 618 retracement on the Fibonacci. And here we go. It's starting to come down now. As you see, we're in the overbought territory. The fastest stochastics are coming down. The momentum is coming down. And so, the path to this side here, and I kind of called this out from the other ones, that it looks like we're going to head back this direction. Don't know, but again, this is the way the charts are, showing us. We've got that rejection up there to that ceiling. And then we'll see a similar move like that right here. It would be like a parallel kind of move. So that's pretty much what I'm expecting. Who knows? It could, go the other way, but I don't have any kind of insights or data that's saying that it's going to be that. Okay. What else? So with that being said, what I am looking forward to is the VIX. All right. And again, I'm no oracle or nothing like that. I'm just looking at the charts, making my assessment. And so what I'm seeing here, that I believe that we're going to get a rise in the VIX. Okay. So again, this is what I believe. I got a trigger here. Okay. We hit that low. And now we breached this little area here, but we never, fell beneath it. And now we're popping back up this way. So that was the boom, shake them out. And then you get that, it's kind of like a rubber band bounce kind of mode that you get that move up. So I am expecting that on the VIX. So, you can play that. You can play the VXX. These are ideas that I'm looking at just so you see. All right. And so we got the buy trigger right there. Same scenario. I don't know what event will trigger these things, if there's going to be anything to trigger, but that's just something that I can see here quickly. All right. And then let's take a look here at gold and silver. See, normally the gold and silver, normally the gold and the silver goes up, when you get the inflation. I think we've been having some issues with the dollar, divergences with the dollar, the strength of the dollar, and it's just kind of confusing right now. We'll take a look at that here in a second too. So again, just keep in mind this is paper gold, not real gold. So real gold, understand real gold, you can't get your hands on real gold right now. All right. You can try to order it and you're gonna be on backlog. So physical gold and silver, my projection on those are that they're gonna be, going up. Okay. The paper gold and silver, they may go down, and that's fine because the real gold and silver, supply and demand, they can't get this stuff out the earth fast enough. It's protection from inflation as the feds are printing all this money and things like that. You got to have a protection from the inflation. So people buy gold. And so everybody's trying to get it and they can't get their hands on it. Now, the chart itself is not telling us to get in right now. Okay. We got a sell trigger here on gold. And so ideally, you would like to see gold come down here to the 50, and if it come down here to the 100, I mean, it doesn't matter. If it come down to the 100, I'm an even stronger buyer. So that's an even stronger buying location here. But if we solidify right around this area here, it's around the 50 moving average, which is right at my 686 retracement, then this is a good, zone here for gold. So we want to see gold trade like this. And if it comes up, all right, then it's time to take out those highs and come back to the next levels. So we could see that over the course of the summer. Um, so that's my thing on that. So what I'm trying to say here is that gold has some buying opportunities that's coming. So if you can have some patience, then that's fine. The only problem with having patience is that the physical supply is is limited. They can't get it out the ground fast enough. So you doing trading the paper stocks like GLD or gold, you know, uh, that's a different story than you buying a real gold. So buying a real gold is definitely your best bet, because no matter what this paper stuff is doing, gold is going to be up out of here. So the same thing for silver. Same thing for silver. Again, we're in a squeeze too. So we have a squeeze here. We do have some sell triggers on this thing here. Uh, let's see if I can pull up my annotation. All right, so we had that sell trigger that was right there. We do have a squeeze that's in here, so it's going to be interesting to see how that plays out. But we do have the direction that's pointing down. So it looks like we may get some down movement here in silver. And again, if we come down, that's fine. We got in the silver back here. So all of this is all profit for us, right? And if you traded the paper silver and everything, then you should be out of that. But that's all profit. So we can come down here and I'm a buyer, right? So just depending on how far it comes down and come to this level, that's fine. I'm not buying here, but if it comes down to this level, then yeah, that's a go for me again, anywhere around that zone. So we'll see. So they'll just basically just keep in mind there's some opportunities that's coming with that. What else? Let's see. He says, why are people on Instagram telling people to buy and hold? It just tells me they know nothing about chart patterns and tech. Yeah, Shad. Yeah, a lot of people, saying this, that, and the third, which is all interesting, man. The financial markets, stuff is, complicated. I've been learning stuff for years and I still don't know enough. Okay. I'm still learning and I share everything that I learned. I was watching somebody's video. Was talking about, what was he talking about? Capitalism and everything. And, I had, very, I guess, very popular in the African American community. I just listening to it and, providing, my insight. A lot of times they try to, take some stuff and spin it to make it, uh, to push their agenda about something. And really, it's just all skewed. You know what I'm saying? It's really skewed stuff. But, I don't try to knock other people. I just provide, the truth or the evidence to back my claim, and try not to debate or anything like that, but to try to get the truth out there to people about how the systems work. Like what is capitalism, right? I posted this stuff. What is capitalism? I posted, cronyism. There's a difference between capitalism and cronyism. A lot of people, they confuse the two. You definitely want to be in the capitalist, economy, right? And that's how everybody makes their wealth. That's how you're gonna make yours. Um, so well, I want to show you guys this real quick on our website. So for you users, I don't know if you guys been utilizing these or not, but it's been here for a little while. But if you take a look at this, this little thing here, and remember, I man all of this. I build all of this. So I don't have a team or nothing like that. I just put all this together. So, but this little search button here, anything that you want to learn about or know about, you just click that little button here and you can type in, whatever the term is. Okay. Now I'm not, Merriam-Webster's, dictionary, but, anything that you should probably know about, then it'll be here. So you can type in terms like capitalism, right? Because this has something to do with what we're doing. So it's relevant to, being in the markets. And then you'll get, things like, this that shows up. We had an article that we wrote about income and wealth inequality that's related to it as well, where we go into this. So you can check that article out right there and click that. Or you can just go to the term itself and then you can get the definition. So while you're doing your studying, what have you, whatever terms you can think of, put in the search bar and they'll pull it up, about this system here, right? What is capitalism, right? It's an economic system that promotes private ownership as the means of production and markets as the means of allocating scarce resources. In a pure free market capitalistic economy, there is no central authority, such as a government directing economic activity. Instead, individuals and companies make their own decisions about what goods and services to manufacture and provide, and they get to keep the profits from their activities. When scarce resources are used in an efficient manner, through the markets, economies can grow and societies benefit. This is the very best system there is. There is no greater system than capitalism. Okay. This is the best system. That's proven. They have proven track record on this. And it's basically just letting the free markets do what they do. If I have a phone and I made this phone, if I want to sell it and Mark he wants to buy it, I have my price and then he has what he's willing to pay for it, and then we meet at the middle, we make a deal. And that's how the free market's supposed to work. It's not supposed to be the government comes in and say, "Hey, Pierre, you can sell this phone for $500." Well, I'm like, well, listen, B, I know better than you. I got people that's out here that's willing to buy this phone from me for $1,200. So why would I let you, the government, force my prices? You feel me? That's the socialism stuff. And then you get into fascism. And so I want to talk about the fascism situation, because if you guys saw Elon Musk, did y'all see Elon Musk going off on Twitter? Elon Musk was wilding, yo. I mean, he went off on the earnings, so they had earnings also, and Elon Musk, he said that the Tesla stock was too high, and the stock dropped. I mean, he's right. The stock price is too high. You know what I mean? Like, but you don't hear CEOs that complain about their company stocks being too high. So he's a very controversial guy. If you think Trump is wild, check out Elon Musk. That guy, he be blowing trees and all kind of stuff, but he can do that. You see what I'm saying? So he was mad, and he was saying, I mean, he was cursing and everything. He was like, open the economy back up, let people do what they need to do. This is fascism, right? And so we was talking about like fascism, you know, that is a terrible system where the government is controlling everything. And so the reason I want to just bring this up here, and then we'll go ahead and bring it to an end, is because we're at a time right now, and I posted some of these on my Facebook page, and I shared some of these things with you. But a lot of it comes from different schools of economics. If you study economics, these famous economists, they talk about these systems like capitalism and socialism and fascism and communism and all these isms. But these are just systems that provide a means to an end. It means that you're trying to get somewhere, and you need a system that can help you to get there, right? And so, but this fascism situation is a situation where the government rules over the people. It tells you what you can do. It's terrible, right? It tells you what you can do, what you can't do. You can't speak out against the government. You can't do any of these things against the government. Government control everything, all right? And so, Elon Musk, he, was saying that, yo, this is fascism. Like, he was going off. And and a lot of people, the country is so divided because of the all the different types of information that's out there. It's so much information, who knows what the truth is, right? You have doctors that's coming out that's saying that it's not what the government is saying it is. So next thing you know, you have the Tube and Facebook and all of them, they're banning their videos, and people should have the right to be able to look at whatever video you want to look at, right? I mean, that's the way the free enterprise, free system's supposed to work. Okay. But when the government forces, that's slavery. Okay, the government's supposed to work for the people. Okay, it's not supposed to rule over the people. For you guys that don't understand economics and politics, you don't understand these things. But the government's supposed to work for you. It's not supposed to, enslave you, if you will. It's not supposed to force you, and that's fascism. That's what fascist governments do, right? And so we're seeing, and the same thing. If people want to look up, doctors, share their expertise, and these guys have, doctors with data that's backing up, their claims, what have you, and they're banning them. So you guys understand that these public companies, they go to Congress. Uh, they're being interviewed by the government, okay, and the government is asking them, what are you doing to control these things? I saw one thing, they had one YouTube. You can look at this up on what's the show called? C-SPAN. Look up C-SPAN. You can look up all these, hearings, these congressional hearings and testimonies and things like that. They're boring, but they have a way that they bookmark some of the things. But they actually, like YouTube and them, they actually, the algos and stuff, they're actually interfering with who gets popping, who's not popping, this, that, the third. They ban your videos and all of that. And they said it. I saw one thing, they was asking them, what are you doing about flat Earth? If people want to look up flat Earth, then let them look up flat Earth, right? But when you just go in, let's ban all of that. Like, why? It's so much silly things that's on the web. It's crazy. Like, should we just, who's dictating what should be banned? See, that's what happens. You're supposed to let the free people do what they want to do. If people want to look up Jesus, if they want to look up Muhammad, if they want to look up, Buddha, who are you to say they can't look it up, right? Whatever, you're supposed to be in a free enterprise, a free world, right? And so when the government comes and oppress, that is not good. So then you start seeing guns and ammo sell out across the country because now people are afraid that the government is going to try to take their rights. So for those who haven't been following why you can't find guns and ammo right now, well, that's the reason why. So people are trying to, because you have the right to bear arms, and they've done this over and over in history, where people were afraid that the government is too big. So when government gets too big, that's what they do. And I posted on my Facebook page and said, if you give them an inch, they'll take a mile. Right? You give them an inch because you're looking at a short-term benefit, but because you did that, you open the door for them to walk a whole mile, and they start going all over the place. Hey, you got to do this. Hey, your business has got to shut down. But who gets to dictate which businesses stay open and which ones stay closed? Right? The people didn't get to vote on that, right? And how do you vote? You vote on that from your shopping behaviors when you go and spend money. That's how, right? But if the government says, oh, Mark, you can't keep your business open, or Sydney, you can't keep your business open because we don't feel that you're an essential business, right? But then this person, they get to keep their business open because the government is dictating what's essential and what's not essential. I mean, there's been businesses that's opened, in my personal opinion, I don't view as essential. Okay, you know, but they're open, right? And so you get that situation where the government is choosing winners and losers. So then you have more of a political uproar. And so one of the things that I don't think that the markets has been pricing in is the political tension that's brewing up in the country right now. And a lot of it's coming from, the situation with the virus. And so, and I posted this about F.A. Hayek. He's, one of the leaders of the Austrian School of Economics. He has a book called The Road to Serfdom. If anybody's interested in this kind of topic, go download it, read it, or what have you. Really good book. These guys, he's talking about, socialism, how it comes in. And it sounds exactly like what we're going through right now, which is so interesting, right? Because what he says is that war is basically used as a tool to bring the people to a united cause, basically so that the government can rob you of all your rights, which is weird. But if you guys remember when Trump was calling the U.S. right now a wartime economy, I mean, we're not in the war. But in Hayek's book, and this book was written in the 40s, okay, and so in the 40s, he was saying that, basically they create these wars on things like the war on drugs, the war on poverty, the war on crime, right? And so I put it in my own, message that, you also got the war on COVID, right? So that's the new war, the war on COVID. And so it's crazy when you see back in history, let history be a teacher, right? So we've seen these things over and over again. And so he said if the people will unite, they're pretty much forced to unite under war times, when the government asked for sacrifices to be made, otherwise they wouldn't be able to do so. But because people are in a psychological level where they feel the need to unite, then they give away their rights to the government and let the government rule over them. Make the like so when you see people staying in the house, it shouldn't be you're forced to stay in the house. It should be we have a recommendation that people stay in the house, and if you choose to stay in the house, then that's great. But to put everything on lockdown is forced. So if those people that's asking, what's going on, that's what's happening. So then you're seeing people that's revolting, and you're seeing people that's marching on, these capital places with guns, giving these demonstrations. That tension is going to continue to play out, you know. And so again, I don't see a happy ending here anytime soon. I think we will see happy days, but not in 2020. Also factor in the election that's coming up in November. It's a lot of drama that's going to be coming out with that. You got Joe Biden that's, I guess going through some kind of sexual harassment. I don't even know what's going on with that situation, but it's looking real messy. So you got that kind of stuff. And then you have, with the government doing what they're doing, if people are starting to look at Trump as a fascist leader, that is not good. That's really, really not good. So he has to be careful. And when he did a step back against, WHO, I think that he kind of won some people back over with that. But he's walking a tightrope right now, So you have CEOs like Elon Musk and them coming out saying, "Yo, this is fascist. That's not good." So you got to keep that in mind. So also, I think I talked about Granddaddy Dalio. He dropped some new framework for us. About the New World Order. He's got this whole framework. And I know people like to talk about Warren Buffett, but like I was telling the old guy, I was like, what did you learn from Warren Buffett, right? It's not about who's richer, who's this, that. It's all about what are you learning, okay? So if this guy provides a framework so that, we can navigate through these times, and Warren Buffett hasn't given you a framework to navigate through these times, You at a time you need to be learning how to navigate through these times. And so if this guy's providing that framework, then you need to learn from it. It's not a competition. Both of them are legends. They're both geniuses in my opinion. I do tend to lean more towards Dalio because of the framework that he puts out. There's nobody who's done it better. So anyway, he's provided this. If any of you guys want it, what I've done is I recorded. I have an audio version of it. And I figured, hey, I got all this technology stuff. Let me just go and read it because I like to, when I'm cleaning up, when I'm doing my daily walks and things like that. I like to learn when I'm doing this. I like to listen to my audiobooks. But I took this framework and I actually recorded it. If you guys want to get your hands on it, let me know. And I actually I'll post it on the site and send you guys a link for it where you'll hear me reading the framework. And it's the whole analogy where he combined with everybody, all the top dogs, historians, politicians, what have you, and they triangulated all their work and they found confluences in the work, how the whole system works together over and over again. And we're at a time in this cycle that he's basically saying that there's a new world order that's coming. And so it's going to play in with our currencies, it's going to play in with politics, it's going to play everything. And debt restructuring, where they're basically going to have to reset the whole system basically because it's all falling apart. So right now you guys see all these SBA loans, all these loans and stuff. It's a nightmare. You have people who haven't gotten their stimulus. You got people who haven't gotten their unemployment. You got people that can't even get through to the unemployment lines, trying to call on the phone lines. I'm hearing stuff about people can't. You got all these big companies is getting the small business loans and things like that. You see what happened when the government get involved? It creates all this craziness. So just expect more drama here. So with that being said, I guess I've done a lot of talking here, done a lot of spilling, and we normally at the end of the session we'll take a couple of stop picks from you guys. I'll take a look at 3 if y'all got 3 on your list, and then we'll go ahead and bring it to a closing. Anything that y'all looking at right now? All right. Okay, and make sure you guys share the videos and everything, hit the like buttons, leave comments and things like that, so that these videos, the algorithms can start picking them up. We'll chop the video up and do an edited version tomorrow. It'll go out. If you're not on the email list, make sure you get on there, so therefore you get everything directly to your inbox. So with that being said, I mean everybody's pretty quiet here. So we're going to bring this to a close, and we'll catch up in the markets this week. As you guys see, the markets are down right now. It's going to be pretty choppy this week. So Mondays, you got to let the emotion come out. Tuesday, be ready to play. The big boys, going to be playing on Tuesday. So Wednesday is going to be a better day for entries into certain trades, unless you want to get into Activision or EA trades we talked about earlier. Then you want to, jump into those on Monday. So just keep that in mind because their earnings is coming up. So you got to go ahead and get in. All right. With that being said, y'all have a good weekend, man. Catch y'all out. Peace.